Hello friends, in this video I will look at what a tick volume of the market in Forex, how to use it to improve trading. Volume is a measure of how much of given financial asset was purchased or sold for a certain period of time. In other words, represents the number of units that change hands or stocks or futures contracts over a period of time as opposed to trading. Forex is its opaque, fragmented, and the nature in which there is the exchange or trading. Forex is its opaque, fragmented, and the nature in which there is the exchange or central, facilitating transparent presentation of the volume of round-the-clock trading activities of financial banks, hedge funds, institutions for individual traders makes the process incredibly difficult. Tracking the aggregated volume in the real time coming through. Because of this, traders mistakenly believe that volume activity in the forex market is not available. What if you could get no lag indicator that would allow you to take more informed decisions as a trader? This is where tick volume comes into play, which measures the number of times the price rises and falls. This is very powerful tool but often overlooked. Do you know what activity tick volume and actual trading spot forex and demonstrate extremely high interconnection? All you need to do is learn it right. Interpret these volumetric models. First, let's take a quick look why volume is a powerful piece of information. The answer lies in influence which it has on price changes, and similarly because it reports attracting big or smart money and tells us about the degree of commitment most to buy or sell. Volume is the fuel to cause new market cycles. Let's now return to the empirical proof of why tick volume matters. After careful studying the tick volume, I came to the conclusion that a surprisingly high level of accuracy between tick activity and actual trading volume, which confirm the importance of data on ticks and therefore their relevance. Before you is a fragment the correlation from my research, which shows a close relationship between price updates and real volume. As you can see, we are talking about correlation plus 90%, so we can confidently conclude that the analysis of tick volume activity gives a real idea of the actual trading volume in the market, in the forex market, of the following which needs to be clarified. Always understand the conditions in which you trade, only which a combination of recent price movements and evaluation their volume. We will be able to read the story unfolding bar by bar out. Reading the market is to take a holistic, pragmatic overall, looking our individual birds first. The pattern is considered is a false breakout if you watch the price moves to key level and at the same time there is a decrease in tick volume. We'll probably find ourselves in the context if a slow volume due to that professional money doesn't participate in the breakout of the level. Let's now see that professional money does not participate in the breakout of the level. Let's now see on a movement in which large players participate and therefore should be expected continuation of the directional movement. I call it smart pressure. If the price moves to level and break out previous lower, and if the price moves to level and break out previous low and increase volume, most often this indicates that the pressure is supported by big money. When this happens and the level is broken, the developing trend is expected to continue. It's time into individual candlesticks pattern that can appear at these levels. This should serve as another price of the puzzle to make an informed trading decision. These candle formations provide many clues to confirm this specific direction. You must make sure that these candles form at the correct levels, which sufficient space move to following logical goals. And remember that candlestick formation is an individual part. Analysis is a key moment of decision making, as in the illustration. We find a volume that stands out above the rest with significant tail candles in at least 1 second size and candles. This is what is known absorbing candles. Sellers bought the buy orders turn out to be overwhelming. Do you think that sellers will then participate again, or they will evaluate on the next the best level? If you see an absorbing candle behind which follows constantly, and execution is an example, then this is almost perfect. Another candlesticks formation that transmits a similar message is a candlesticks with stopping volume. This is a movement which carries a lot of volume, but this time the candle size is much more compressed and ideally closing off a preferred direction of trade, but this is not necessary in action. Relatively small bullish candlesticks in relative large volume when price returns to the resistance level. If you think about it, then the candle is small size with such a large volume can only be possible if sellers show great interest in absorbing any demand. When such a pattern arises, it tends to stop the price for potential reversal. Another type of pricing is a candle for real money. Its unique feature includes a large candle followed by a swelling volume of this formation has very little absorbing, so she also reports that the imbalance in demand offers for exit the opposite side when they appear. These candles should be expected limited continuation of the movement. They can be created only when community participation of intellectual money banks, cetaceans, hedge funds, and so further. If there is enough space to the next target area, it is candlestick formation tends to move further with slight pullback when retail traders start to enter. Nevertheless, due to extended driving conditions usually reestablished here, the swing the trader and smart money will look for the opportunity to resume the deal. Pay attention to the traded context on how to be candle on real money falls when it is traded as a key resistance along the way down. The next type of formation in the list is an exhaustion candle. If the price rise break through the key level against previous level of no significant volumes, the chances that the area will be violated very small. As the name implies, sellers in this example, they simply exhaust themselves as a result of the buyer. In the above chart, I have combined several exhaustion candle as part of false breakout, which at the same time occurs in more the broad context of trading at the beginning if the big money candlesticks movement. Now it's time to define and ask yourself to the next logical question, like you used tick volumes to find key market entry points. Low risk. Finally, take the time to think about whether volume study will help you in the process of making correct trading decisions on the volume study will help you in the process of making correct trading decisions on this. While we all do not forget feedback